Hello guys, so today we're going to be talking about algorithmic trading. So I made this mechanical strategy in about 20 to 30 minutes and I'll explain how the strategy works as we play this through the MT5 strategy tester. But I just wanted to clarify that making mechanical strategies are not that difficult, to be honest. Like, I'll explain this as we go. So the SL and TP is based on something called ATR, which is a volatility indicator, and the risk to reward is a risk 1.5 to 2, and it's currently risking 1% per trade. So let's continue with this real quick and I'll explain it as it begins to pop up. So basically what this strategy does is it will get the high and the low of Asia session. It'll get the high and the low of Asia session, and when it breaks out the high, or if it breaks out the low, it will retrace, and at the 75% of the Asia session it will set a limit buy over here. It will set an order here to buy to continue up, and if it breaks out of here it will go to 25% of the session of Asia session and set a sell limit here to continue down. So ultimately it's just a break and retest strategy. So yeah, let's continue. So what I was thinking is that it is a good strategy, and I feel like, I quickly tested it, so I know it's going to work in this 2026. However, what's important is testing whether this strategy will be good in other years, or whether the market is shifting towards this strategy being profitable. I will give everyone access to this if they want, but use it at your own discretion as well. So this strategy right now, it also works at a 1 to 3, but there's periods when it's working at a 1 to 3 where there'll be about 2 months where there's heavy losses, so I don't think it's worth it. I think it's better to have an average of a consistent strategy year round, where I believe there was only 1 or 2 losing months at the moment in this 2026. But 2026 conditions are difficult to grasp because of all of the geopolitical stuff that's been happening. It's had a big impact on volatility, and it's had a big impact on the strength or the weakness of euro and the US dollar. So there's a potential for this strategy only working in these niche conditions, and that's the importance of testing it. Obviously this is just what I'll do is I'll speed it up a bit, and after we'll get into the statistics. So this is good at the moment. I think when it was in January it was at about 8%. We see these heavy fluctuations are not what we're trying to see. I'm not trying to go from 8% to 1%. So there'd have to be something to mitigate such a thing. And also there is no news filter on this as well, so let's bear that in mind as well. So to be in April risking 1%, and being at 11%, I don't think it's that bad. I don't think it's the best either, but I don't think it's that bad. Especially for algorithm, it's like a pure mechanical strategy. So let's just continue pushing so we can get into the statistics quickly. I'm not sure what it finishes at. So this is it risking 1% though. So you got to bear in mind, yeah, if this is risking 2%, this is at 32%. Like if this is risking 2% per trade, this would be at 132k, which would be very good for 5 months into the year. But obviously, especially if you're using this for prop firms, I wouldn't advise its use at 2% per trade. That's very risky. But it's cool to see that, okay, cool. You know, if it was risking 2%, that's 54k right now as well. So building algorithms is just about being able to, you know, if you're able to look at the markets and produce a strategy that you think can be profitable. I've made so many different strategies, and there's only a few that I would say are consistently consistent, but this isn't a bad strategy to build off, which is part of the reason why I'd want to give access to it, access for someone to build off this strategy. You know, they might see stuff in the tester where that they can change and use themselves. So we end off risking 1%, we end up at 22% in 6 months. So if we take the assumption that it's going to do the same thing over the next 6 or 7 months, approximately we would say it's going to do 40% annually. But that's if we take the basis that it's going to have the same consistency. So at 2%, this would be at 44% in a year. Risking 2%, this would be 44% a year. So let me quickly go into the statistics for you guys. And yes, it is being done on a demo account because I'm simply testing the strategy. So these are the statistics. So what we get: initial deposit. This is a big problem. The gross profit being 94, but the gross loss being 71k. Typically, you'd want to mitigate this. You want this to be, I would say, in my opinion, I would want it to lose probably like 45k. Because it's losing almost 100%. Like it's losing almost 100 total profit as well. So it's a bit too close for me. And you can look at these stats here: the absolute drawdown and maximal drawdowns and such things. Equity drawdown here. Profit factor, it's a decent profit factor. I wouldn't say it's the worst. Recovery factor is quite good as well. Then we get the LR correlation and standard error, which is decent. I wouldn't say it's the best. Marginal level, z-score. So it actually provides a good amount of data, and you see that the win rate actually on the short trades was 53% basically, and then on the long trades it was 43%. The reason why this is fine for it to still be profitable is because it risks 1.5 and the reward is 2. So having this is alright. I wouldn't say it's the best either, but we could test it at different risk to rewards as well after for clarification. But you guys can see this. Consecutive losses was at 7. Consecutive wins was also at 7. X, Y, and Z. This is what I also like to look at, because as you can see, if you're a trader looking at this, like, you can be like, okay, cool, this strategy loses more than often on Fridays this year, so majority, because it wins on every single other day. So now you could add a filter that says, okay, this can't trade on Fridays, it's not allowed to trade on Fridays, and I can guarantee you a lot of these losses will be cut out because on every other day it's profitable, right? So you could do stuff like that if you want to develop this strategy, and if you want to see me continue to develop this strategy, then I will. So yeah, we get January, big winning month, and then we get February, losing month, then we get a big winning month again, then I'll say a decent winning month, decent winning month, decent winning month, and a big losing month in July, which is the current month, which is fine. But there's probably ways to mitigate this, because what you have to understand is these wins and all that is based on the risk and reward being the same constantly throughout the months. So you could look at the way it trades when we were watching this year. This is the reason why I say you visualize it and look at how it's losing or why it's losing. Is it because the SL is too close, or is it because the TP is too far? Is it that if in July 1-to-1s could have been better, or if you made it 1-to-4s, the amount of wins would have covered the amount of losses, and this could have been a positive month, for example. There's just many ways that you can look at it, but you don't just take this and be like, oh, I lost, so nah. You're supposed to test it and look how it behaves in different market conditions. So obviously this kind of gives the same kind of data. This is the profits, and minimal position holding time as well is actually quite interesting, but I wish it could give a correlation between the position holding time and how much it loses. So if we could see something like, oh, if this position is held for an hour and 30 minutes or 2 hours, typically it's going to lose. So we can look at averages like that, because then you could add some intervention into the EA, like, oh, if this trade is being held longer than 2 hours, then just try to mitigate the trade or something. You can add some different techniques and all these different things, but this is also another important one, like the times, because we know that obviously the reason why there's no trades here is because this is where Asia session would be. So typically when it taps in around these later times, it seems like it will be good, or it seems like it will be better when it taps in mid-afternoon, just after New York session has opened. It seems like it wins during New York quite well. So more correlations to be made. This is the equity curve. So this is a good equity curve in my opinion, because I feel like you see consistency. This is like an uptrend literally. So to see this dip is not a problem, because this equity curve, I would say, is a good equity curve for it to continue pushing. When I had made this, I had initially made it for NAS 100, but I haven't tested it on NAS 100 yet, so we'll do that soon. Then these are the inputs that were used: Asia session 0, 9, so you can make the lot sizing based on risk percentage. So we have it risk in 1% per, not fixed lot size, but 1% per trade. And then after, we're using ATR, SL and TP, which is a dynamic SL and TP. So like I said, 1.5 to 2, which is good. I do have a trading stop loss in it, but I'm not an individual who really likes trading stop losses, because I feel like you have to let your trade play out rather than cutting it short early and stuff like that. So yeah, ultimately just produce a mechanical strategy. They're not that hard. Use breakouts, mean reversion, and break and retest. Look at the chart and go, for example, pull up a gold chart, look at how it behaves, maybe look at where you see more volume and volatility, or even go look at the depth of market of previous days and all that kind of stuff. Then go look at where there's the most volume and volatility. You can also use a volume profile to see stuff like this as well, to see the distribution of volume typically, and in what sessions is there more volume. And you know, go look at sessions where price pushes more and leverage that. You get what I mean? You ain't got to make trading difficult. It doesn't have to be all these fancy this and that, whatever. I made this strategy in 20 minutes and it produces 22% risking 1%, so 44% risking 100, risking 2%, and then we're only 7 months into the year. So if I was risking 2%, this could make 60 60k in a year, or 65, 70k in a year. So yeah, just look at the markets and try to build a strategy. Obviously, I could, I don't know, maybe start a mentorship talking about how to make these things, these bots and algorithms and all that. So we'll see. But that's the video for today. Praise be to the Most High. 355 out.